We're back, joined now by Michael Markowski. He's the founder of something called shinypennies.com. Michael, welcome back to the program.
Hey, nice to be back.
Now, you're at a trade show in Miami, aren't you?
Yes, actually, I'm at two conferences, two investor conferences with professional investors this week. I just finished one, which is the Wall Street conference, and there's a bunch of I found a lot of interesting small companies that are going to be great to get on your show. This show. What I'd like to do is maybe what I'll do is I'll send you a summary on those, and you can send them out to your audience, your subscribers. So basically, shiny penny stocks. I'm looking. I'm predicting this. This is the Wall Street conference. It was attended. That all kinds of people on the conference, and including the former ambassador John Bolton, who worked for the Trump administration. He had a congresswoman here from the state of Hawaii was here. All speakers, two retired generals, and it was quite a conference with a lot of up and coming companies, many of them public and under $5 a share, which is what we focus on at Shiny Pennies. We're looking for stocks IPOs that went public at $10, $20 a share. They're now $2 and $3 a share. This is the time you want to be buying these type of stocks. So all of your viewers, really want to increase their portfolio stakes in these low price stocks, because according to my information and my research, the big market is going to continue to decline. So you want to get out of your Amazons, you want to get out of your Apples, and you want to build a diversified portfolio of the low price names. And we have those at shinypennies.com. We recommend those low companies there. Some of them that are featured on the show, your show, are in our portfolio. So, and it's at shinypennies.com. I think the subscription is maybe $20 a year. I think there might even be a free trial on the page. But we've got a bunch of new companies, and I'm going to refer them over to you, and hopefully you can get them on the show.
Well, you've always maintained that a company selling for $2 per share has the potential to double a lot easier than a company selling for $100 a share.
Absolutely. Especially in a difficult market, which this market is. And it's going to be difficult for the next few years, the big market. You want to focus on, I've 47 years of experience in the markets, and I've been through these bear markets, and I can tell you that the big winners in these kind of markets, when the big stocks are coming down, are the little ones. They're the big winners. I recommend I never forget Savin Business Machines, which was the second photocopy machine in the U.S. I watched the stock go from 2 to 50 in the 1970s. Because they came out with a second copy machine, a much more affordable copy machine. And maybe a lot of your viewers, maybe a lot of your viewers will remember this, but copy machines used to be, when they first came out, were behemoths. They were big machines that took a lot of electricity and had big square footage needs. Savin came out with the first personal copy machine. And that was a good example of a stock that could really, it went from $2 to $50 a share in about a year, from 1978 to 1979. So we're looking for these kind of opportunities. I find them all the time in your portfolio on your show. You add them in Shiny Pennies, and your audience should definitely be looking at Shiny Pennies.
What kind of strategy do you recommend, Michael? Do you look at having a salad, so to speak, of a variety of small cap stocks, maybe small holdings in each, or do you recommend getting into one larger holding?
No, I think you should diversify, and the strategy I say is, whenever you buy a penny stock, you should always be prepared to double your investment. Okay, because 9 out of 10, I don't care what price you pay for them, they will go down before they're very volatile, so they'll go down before they will go up. And so the best way to do it is to invest half of you. So if you had $20,000 and you're going to buy 10 of them in your portfolio, to give you an example, then what you would do is you would invest the first one you put in there. You invest $500 and wait to see what happens. If it goes up, then you've got a winner. If it goes down, you can average down your position, but you want it to go down substantially, and you can average down. So that's the best way to do it. I would say always average in. So be prepared to average in, and if they just go shoot straight up, then you've got money for another position. You've got the money for another position.
Are there any industry sectors that you're looking at harder right now?
Well, actually, let me see. One of them, one of them was in the home. I'll give you the symbol on it. SKYX is the symbol on it, and they're basically have proprietary devices for the home, enables any common consumer to change a light fixture in your house. Easy to use home appliance, for what you need. So right now, when a consumer on this SKYX, symbol is SKYX, a consumer right now, they want something changed in their home, they've got to call an electrician and pay $500 or whatever to get an electrician over to basically to make the change. They got to pay all this money. So this company has it self-installation. They're probably going to get their products in all the Home Depots, Lowe's. They did an IPO, they did an IPO at a much higher valuation, a much higher price. And after the IPO, the stock plummeted, as they typically do. And I think it's a great opportunity. Yeah.
Once again, shinypennies.com. Check out the website. Michael Markowski, your input's always valuable. Thanks for joining us.
Thank you so much, Don. I'm looking forward to the next show.